Alright, welcome to another video on how to secure yourself financially. So, by making a quick recap of the beginner guide to financial statement from the SEC, I just wanted to recap and also remember the phrase, this Latin phrase like repetitio e mater studiorum, right? So, not only to repeat that or memorize, but also to be able to see the patterns here, right? So the relationship, especially on a particular topic, not only to see a set of financial statement, which is something helpful once you know how to learn and read. Well, yeah, once you know to uh, once you know how to read, once you know how to read and learn, Jesus. Once you know, it's because I wake up pretty soon, man. Okay. So once you know how to read basic part of financial statement, so much like the CPA class teach you how to perform cardiopulmonary resuscitation, uh, this section won't train you to be an accountant, much like a CPA class won't train you to be a cardiac doctor, but it can give you some confidence when you're able to see a set of financial statement, make sense of that. So if you're able to read nutritional labels or read box baseball baseball box score or soccer box score, you can learn to read basic financial statement. And after all, they show you the money, right? So from the Cuba Gooding Jr. immortal lines from Jerry Maguire movie, show me the money. That's right. So that's what it is. This financial statement. This they show you the money, and there are four of them. We have balance sheet, show what a company owns in a fixed period of time, show what a company owns and what it owes at a fixed point in time. The income statement show how much money a company made and spend over a period of time. Cash flow is show you the exchange of money between the company and the outside world, as well as the shareholder statement of the shareholders, which this give you and show you how the interest of the shareholders change over time. So the balance sheet, after all, the TLDR is a snapshot of the company assets, whether it's tangible or intangible, liabilities, and shareholders' equity. Meaning is the amount of leftover money once the company sell all of their assets and pay off all of its liabilities. That's the money that belongs to the shareholders. Doesn't belong to the workers. I don't know. It belongs to the shareholders. So this balance sheet is generally listed following is the formula assets are equal to liabilities plus shareholders equity, or you can find them is all the assets list on the top followed by the liabilities and the shareholders equity. So typically these assets are generally listed based on how quickly they can be converted into cash. So you have current assets, which are assets that you expect to convert that in a year or less, and non-current assets, and also assets that are necessary for your business to run, such as furniture, office supplies, and machinery. Liabilities are listed based on their due date, and you can have is current liabilities and long-term liabilities. And ultimately, we have is the shareholders' equity that is show the amount of money that the owners has put plus or minus the earnings from its inception. So then I look at the income statement where now it shows you, well, if a company may or not profit. The bottom line show you that, and you can think of that as a set of stairs that you start from the top, and then once you go one step at a time, you make a deduction associated with earning that revenue. So at the end of this stair, or the bottom of the stair, you find if a company made a profit or not. So we have is uh, the gross revenue at the top of the stair. Once you go down, you make deductions based on the merchandise return or money that a company doesn't expect to collect, like discounts, until you reach to the net gross revenue or the net revenue. All right. Once you deduct from that, the cost of sale is how much money a company is paying to generate the good and service over a period of time. Then you read at the gross profit, which after deducting things like depreciation, amortizations, operating expense that are not the same as cost of sale because operating expense cannot be linked directly to the production of goods and service, but they are necessary to run your business, such as administrative salaries, marketing, research, new products, or improve existing ones. Then you read something called operating profits before tax and interest. So interests are uh, deductions that you made based on in based on interest. So for example, if a company invests on money market funds, so it can be add that instead of subtract that. It's gonna depend. And ultimately, we find is the income taxes, right? Until you reach is uh, the bottom line of that statement, the net income, right? And then I look at the cash flow statement, which reports the company inflow and outflow of cash over a period of time. It reviews information from the balance sheet and the income statements. And it is important because company needs to have cash to pay its expense or to purchase assets. So generally, this statement is made of three parts. So you have the operating, it review the cash flow from one of these activities, the operating activities, financing, and investing activities. And the bottom line of this statement show you the net increase or decrease in cash. So looking at the operating assets, that what it does is to look at the net income from the income statements, analyze that and conciliate with the total amount of cash that was used or perceived from operating activities. And the most common operating activities can be laid down into operating assets and liabilities, where operating assets we have is accounts payable, inventory, prepay expense, uh, accounts receivable, accounts receivable, inventory, prepay expense, so expense that a company incur for good and service that are going to enjoy over a period of time, uh, or that will give some benefit in the long run. So, for example, premium insurance, healthcare for medical coverage, home or vehicle to protect those belongings in the case of some kind of accident, lawsuits, or these liabilities like lawsuits, death in the event of the policyholder's death, the mm, long-term care such as nurse, home care or home health carers, as well as disability, rent, marketing, software licensing, maintenance contracts are part of this prepay expense. Also, another operating assets like intangible assets such as patents provide exclusive rights to creator of original work or inventors in this case to manufacture and distribute their inventions over a period of time. So, for example, from a popular website called Popular Mechanics, when they have an article list of the top 15 patents that changed the world, maglev, this electromagnetic inductive system for stabilization and suspension for ground vehicles, issued in 1969. So, for example, maglev train that's one of the patent that, and that patent has changed the world. For example, GPS, or as their patent name, navigation system using satellites with passage ranging techniques, in issue 1974, electronic device, or aka the cell phone or iPhone in 2007, as well as the CRISP, or this gene editing tool, issued in 2014, trademarks, which are exclusive audio, image, or design that uniquely identify this company from the competition. So, for example, it is famous quote from Michael Burry, uh, Michael Buffer, Michael Michael Buffer, yes, from Buffer, not Michael Burry. Michael Burry is someone else. Exactly, it's from the shore, Big Shore. So yeah, so Michael Buffer, okay, uh, Michael Buffer. hmm So like Michael Buffer and its famous word, "Let's get ready to rumble," copyrights, which are exclusive rights to creator of original works to uh, sell and distribute that invention over a period of time, such as McDonald's, Twitter, Spotify, uh, as well as goodwill, the brand recognitions, reputations, and customer lists, and trade secrets, which are confidential data that companies use to take competitive advantage over process, formulas, or customer lists. Another operating assets like investment in affiliates, such as joint venture, which is a partnership between two or more companies to undertake a specific business activity, such as where which each part receive a share of the joint ventures, such as Crocs and Post Malone. Equity investment, where a company purchase significant amount of stake on the another company to gain influence and potentially right its voice over the another company management decisions. We have is Berkshire Hathaway, for example, lead by Warren Buffett, that, and it is funny because this holding company, that after all, a holding company is just a company that engage through owning stocks among other companies, not engaging directly in the business. So, because the capitalists promote this kind of enforcement or this kind of practice, they like equity investments, where now mm, a lot of shareholders can, by purchase stocks on another company, can raise its influence and change the another company management decisions. They do that by the solely purpose of the capital, which is not bad. After all, they're following is that particular practice. The funny thing is that in the reality, the market doesn't work, doesn't align completely as the capital. You know, unless you have an inherent value, that is where the capital aligns most of the time. So, for example, align with an inherent value, Vice is one of the great examples of that. So, Vice at the early days, they begins to be a very edgy journalist, right? When they talk about very sensitive or taboo topics, but ultimately, a lot of shareholders came in. They tried to change their company management decisions to earn more profit, and ultimately they fall apart. And now, recently, after a couple of years, let's say from 2012, 2018, so now they have go back to its root. So that's a great example of how, even though, okay, there is value in that. So one of the things that shareholders doesn't look is the value that things, or some things provide, that, because they're so extremely focused on the capital, which is not bad. But ultimately, this business will run is based on the value that we provide by the market, by the people. So if the people consider that we're providing them of something of value, okay, that's why they pay for you, right? Or you can also manipulate that with some psychological persuasion tactics to do that, but uh, at the end of the day, they'll figure it out, or some of the older or newer generation will figure it out anyway. But that's something interesting to look at that, right? This equity investment, and how, even though that doesn't doesn't align completely to the true nature of value, all right, of how the market consider value things. Uh, by looking also at the psychological trait of humans, well, most of this startup or company or top tech giants has milk out, for example, of our sins, right? Have milk out our sins, lust, yeah, laziness, yeah, lust, laziness. What is the name of the seven sins? Seven sins. I don't. Or the seven original sins, or seven deadly sins. Mhm. All right. This is in Greek. Gluttony, uh, lust, greed, as envy. All right. Sadness as another good fortune. Exactly. So sadness, wrath, dejection. or depression, boasting, bragging, and pride. So a more shorthand version is this: gluttony, loss, greed, sorrow or despair, wrath, sloth, vainglory, and pride. And that's one of the things that has the worship of mammon through to mean money, material wealth, or any entity that promises wealth, and it is associated with the greedy purchase of gain. Mammon. Ah, okay. Mammon. But it's that, what happened is that all of those sins are inherited traits in ourselves. And we can easily promote that fast. There is nothing to do. It's pretty easy to do that. Even though you don't have to do almost anything to feel them. You don't have almost anything literally to feel them. you know and it's like, oh, all right. William O'Can, John Donus Scotus, and Aquinas. Dr. Angelicus. He holds he holds a church in a document. He doesn't hold anything. He doesn't hold anything. But in any case, so yeah, that's one of the reasons that in it all talk about this equity, right? The equity investment as part of the investment in affiliate, and how you can is or in my case is I'm playing devil advocate with the reasoning behind why a lot of these equity investments like Bar- Berkshire Hathaway that invest in a variety of in sectors like energy, retails, and real estate, as well as SoftBank, which is a Japanese conglomerate that invests in a variety of primarily technology companies such as Uber, WeWork, Alphabet, which is another holding company that invests primarily in technology companies like Calico for longevity is a parent company of Google, and it invests that through its venture capital arms. You also have Texas Pacific uh, Group, that is a private equity investment that invests in sectors like healthcare, real estate. So all of this examples is to see how these the investment in affiliates or the investment in affiliates shape the nature of ourselves, and then based on our ideology or based on our reasoning or why we are doing this is to earn a profit, because after all the whole point of this investment in affiliate is to earn a profit or gain some competitive advantage. Okay, again, this is our human traits that are in ourselves, that we can find them, and there's nothing, or there's few uh, there is something that we can do. There is no few, there is something that we can do along the way. So, okay, it's like, okay, okay. hmm It's like, okay. Now, okay. Another investment in affiliates are limited partnerships. So when a company or investor uh, purchase stocks on a limited partnership, gaining control over the partner's liabilities and operations, okay, which is kind of shady, but in any way, an associate where a investor or the company owns approximately between 20 to 50% of shares. And keep looking at other operating assets like cash and cash equivalents, such as money market funds, which are funds that invest in a short term, very risk financial products, such as they invest in a very risk short term debt financial instrument like bank acceptance or debt issued by banks, certificate of deposit, certificate of savings with short term maturity, commercial papers, unsecured and risky corporate debt, as well as repo, this repurchase agreement, government debt. So once I look at these most common operating assets and now on the most common operating liabilities, such as account payables, money that you have to pay to suppliers or vendors, such as raw materials, office supplies, service, accrue expense that a company incur for good and service that has been received but not yet paid for, such as wage and salaries, rent, taxes, utility bills, deferred revenue, which are obligations that a company has to pay for money that have been collected. For example, subscription service or gift card. In this deferred revenue in Spanish is ga- ganancias diferidas. So they dilute that or deferred revenue. I also look at the income taxes payable, amount of money that a company owns to the government based on their income and a tax rate. So you have corporate rates or corporate tax, where in United States is something around 21% right now. So if I recall that corporate tax in US, mhm, corporate tax in US, uh, corporate income tax as a share. Wait, what? No, US corporate rate tax. Okay, statutory corporate tax, effective corporate tax rate. So right now it's something about 20. So they plumb that. No, but this is 2012. Okay, now no, I'm looking. It's for corporate tax in US 2023 from PwC. That's right. This what's a PwC? PwC. I think this is a accounting company. It's an international professional service brand of first operating as partner under the PwC brand. It's the second largest professional service network in the world and is considered one of the big four accounting firm. Yes. Okay. It's one of the Jesus. It's one of the big four accounting firms. PwC, Deloitte, EG, and KPMG. Accounting firms. Jesus. Okay. So corporate book minimum tax to be effective for 2023. This provision imposes 50% minimum tax on adjusting financial. Um, okay. Jesus. Jesus. Okay, I can make a quick recap of this. Jesus. I can even ask ChatGPT something like this. So, based on the link provide based on the link provide with based on the link provide on based on the link provide with triple quotes with triple backticks summarize summarize the indicate what is the capital what is the core corporate corporate tax in 2023. So what you can do is, well, using a ChatGPT for this, you say, hey, you know what? Indicate what is the corporate taxes. I cannot read. Okay. At least this model. All right. Okay. Mm-hmm. Interesting. So meaning that so with GPT-4 you have access to internet, right? Is OpenAI most advanced systems producing safer and more useful response? But not everybody can have access to this. Um, hmm. What about the ChatGPT from engineering here, which is part of the course? Okay, let's go and choose sign in. That's right. Opening here. Good. Jump to guidelines here. That's right. So let me ask. No, this is a text. No. Okay. Now you know. Let me test. Let me see. So load the basic setup. I don't think the model will be able exactly because it may contain information about the corporate tax. Yeah, so they restrict that access. Okay. Mm-hmm. 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 So that might be something useful to implement. So implement a summary implement a summary implement a summary web app using chat GPT. implement implement a summary web app using ChatGPT for external article link. Yeah, it is a shame. It is a shame. But in any case, yeah. So this is the big four accounting firms. Los cuatro gigantes en Spanish, los cuatro gigantes de las firmas contables. PwC. Noise. Noise. Okay, okay. PwC, Deloitte, AG, and KPMG. KPMG. So, okay. So keep looking at the other operating liabilities, okay? Like income taxes payable. So we have corporate taxes, we have withholding taxes, which are money that the employee retain from the gross employee's salary and pay directly to the government. This is to implement, according to Investopedia, the pay as you earn tax system to fight tax evasion. And also the sales taxes, like uh, state sales taxes, county or city sales taxes, VAT tax, which is a tax imposed at every stage of the production of good and service from production to distribution, where the customer ultimately pays the full tax, the full VAT, and business along the supply chains remit that portion to the tax. And also you have excess taxes. I think you say that excess taxes, E E X C I S E, excess taxes, where are tax on certain goods such as tobacco, alcohol, guns, uh, yeah, such as tobacco, alcohol, guns, and gasoline. And then I also look at something called the GST, the GST tax, which is the global GST tax. How do you say that? Is the good and service tax, and which is a tax imposed over the VAT. And this is something that is on Canada, Australia, and India. Oh my God. In any case, they also look at short-term borrowing, which is another type of most common operating liabilities, which is a short-term debt that a company must repay within a year or less. You have bank loans. They usually do this to meet their cash flow needs or finance a short-term product. You have banks loans to meet also their working capital. Working capital is the difference between the current assets minus the current liabilities. Okay, this is an indicator of short-term financial health and liquidity. Okay, if the working capital is too high, meaning that is the company is not enjoying short-term opportunities or short-term debt opportunity, or is not investing, it is exceed in capital. Okay, the working capital. And bank loans is one of them. Yeah, bank loans, line of credit, a floor to ask for a certain amount of loans or for borrowing money, a ceiling, in this case, a ceiling put on a company for how much money it can borrow, line of credit, uh, trade credit, which is the promise of a company to receive a good and decide that it's going to pay that at a certain date. Trade credit, uh, outstanding invoice. For example, a company can show it is outstanding invoice to a lender, and the lender may decide to see how much is going to borrow or how it's going to lend based on the value of those invoices. And um, the payrolls advance. So I'm going to leave like that. So that'll be all for this video. Take care. Bye bye.